Hi everyone, welcome to Tomorrow Events video channel. I am Manish here. A lot of people are asking us if we actually predicted the fall of Tesla, which was observed today in the market, falling by 9% in our last video. The answer to that is we kind of did, in as many words as possible, because any clearer, it would have been a suggestion for trade, which these videos are not about. They are more about educational purposes. If you want to trade in the market, you'll have to take significant risk and do your own due diligence. About Tesla, however, in our last analysis, it's clear that it was kind of breaching the upper Bollinger Band, and it was obvious that it is in an overbought zone. And when that happens, stocks usually fall. And if you recall from that last video, and I'm going to leave a link to that video in the description, it was obvious that we were stating that the stock that we're talking about, Tesla, is in a overbought condition. And what has happened today has happened. It has lost 9%. So the question in the market is what you should do. Should you hold to the stock? Should you sell the stock? Should you buy more stocks? Should you average out, buy more stocks at lower cost? So let's analyze this. And like last video, I'm going to share my screen. And I'm going to go to a website called almostinsider.com. And I'm going to put my glasses again. Without those, I cannot see. All right. So that's Tesla at almostinsider.com. So that's the rudimentary analysis, 89.1 billion. So market cap, outstanding share 3.17. That doesn't concern you. What concerned you is the earning per share paradigm. And it is reported that the last earning of Tesla is only $3.3. So $3.39. What does that mean? It's not good. I'll tell you why. Because that means if you look at the chart here, it says Tesla is actually trading at a P ratio of 82. That's bad. By any stretch of imagination, this stock is overvalued. So kind of the acceptable PE ratio is 20, maybe in US is a little bit higher, but in most part of the world, you say 20 is an acceptable. And you undervalue by 5 or 12, but at 80, this stock is trading at a value which is much higher than it should be. So that's one point. And we're talking about a very basic fundamental indicator here. So in terms of Tesla, yeah, it can almost every time when you look at it, it's over 80 PE ratio, it can fall. There's a technical analysis chart, but that is from TradingView. It says sell, but that's the 1 minute. Hold on. Let me see what it says on a 1-day basis. Doesn't change. So they think that it should be sold. And what about a month? Buy. Okay. And about a week, still a buy. So they have different views. So let's look at our own charts, our own assessment, and to see what you should do about Tesla right now. So below the page, you'll see a chart. Let's look at the chart. That's bad because you can see these candles. It's a big red candle over here, and it has closed at 262 minus $28.36 minus 9.74%. That's actually very bad. And if you look at the chart, you'll see this is the biggest candle. See, you probably won't see a candle of 9% anywhere except maybe here. And that's 5% actually of that value. So 9% is the biggest candle that we are seeing in the recent price patterns. Also, it has breached last low. So that's a sign of at least medium-term bearish trend. So it is likely that this huge red candle is indicating that Tesla is going to go with that particular momentum and it's going to fall further. I don't know how much, but this is another resistance, but this is 240. not too far off from where we are right now. But yeah, that's another resistance. If it falls below that, it can, go up to maybe here or here. I don't know. And we have seen if you can recall the last video, you see the last video, it falls by 70% or 60% or 70% in a matter of weeks. So that's the danger of having Tesla in your portfolio right now, because if it falls, it's going to fall bad. And this candle right here is not good news. So yeah, I cannot say you should sell it or buy it. What I can tell you, this doesn't look good. Also, look, the premise of technical analysis is that technical analysts do not necessarily predict the stock prices. They actually kind of, and that's my view, by the way, they actually kind of try to understand the underlying opportunities in the market. And right now, if you look, I'm not saying you should short sell, by no means. But if you look at right now, it's making at least a medium term or shipping up in a medium term bear trend. So yeah, that's a bear trend for sure. Now, what can happen tomorrow? It has closed at 262, which is quite close to its low. So what can happen is can actually happen open with a gap on the downside. And if it opens with a downside, I'll just tell you a little trick. When the stocks open like it did today, it usually do not breach their open price. I'll tell you what happens. So when they do, there is always a chance of a reversal, but not in such cases. So if it opens with a gap, maybe here, it won't come back. And if it comes back with the force, then it will be a reversal of medium-term trend that at least was possible, of course, but not plausible. So this can happen in the next 2-3 sessions. So I cannot say that you should hold to the stock. If you have made significant amount of money and you bought it at 100 something, go ahead. If you are in the long haul, go ahead. But here is the thing. Why would you go for a long haul? This stock doesn't pay dividends. So it doesn't pay you anything. You only make money from the stock price. So there is no investment gains in the stock. So that is the reason why you should be very careful in trading, buying, or keeping such stocks in your portfolio. They will give you an absolute unbelievable jump on your capital or your equity value. But when it comes to what is happening to the stock, it can be detrimental to your equity. So I would say this doesn't look good. You can have to make a decision. One thing that it's quite clear is if you're in for the long haul, by the way, it gives you hard tax. You see, this has fallen by like 70%. It keeps doing that. So if you enjoy the volatility, it has ascended by 100% already here. If you enjoy the volatility, if you're that kind of trader, you're welcome to keep it. And also, if you look, this is a trend that is forming. So there is light at the end of the tunnel already. So, and this trend line, if it doesn't breach this trend line, it can come back from here and make another high. So there is always a chance that it can reverse, as though it is highly unlikely, but that can still happen. So I leave that to you for you to make a decision. But I can tell you in 2 words, you should be extremely cautious when you're dealing with Tesla these days, especially in the next few sessions. We'll analyze more stocks. Stay with tomorrow.events. We'll come back with more analysis. Thank you for joining us today.